Good afternoon. This is Ken Long from Tortoise Capital with a review of the weekend trading reports for April 13th, 2013. We have a market that is in bullish normal conditions still. On an annual basis with weekly RSI 14, it's overbought at 75 out of 100. On a 10-day basis using the 10-day NDX, it is also overbought with a score of 85 out of 100. Looking at the additional market indicators here, we've got price relative to the 200-day moving average is green bullish at 10.60%. The slope of the 50-day moving average is white bullish at 0.59%, so both of those add to the bullish conditions. ADX 14 is at a neutral 16.8. So the good news for the bulls is that this still has not even resumed its trending upward behavior, and so there's room for it to go. ATR percentage is in the mid-range of normal at 0.93%. The risk-on index, risk-on, risk-off index, which is the 30-period moving average of the VIX divided by the 10, is right at 1.0 for risk-off. That's actually a rounding error. It's like 0.999, so it's slightly less than 1.0, and that's why it indicates risk-off. The z-score of that value is minus 0.08 when you look back over the last 5,000 days, so right in the middle of normal. And this is the time series of that risk z-score, and it favors sharp moves in either directions, essentially based on volatility. Could either get very quiet and resume the upward bullish tendency, or a sharp spike here. For example, if something stupid happens with North Korea, it's postured to spike. So no indication from the risk. The blended monthly rebalancing portfolios, no changes. The 26 remains with mid caps, Japan, and finance, and the 13 ETF with mid caps, Japan, and U.S. small caps. Next reevaluation on or about 1 May. In ETF 2, the theoretical exposure is at 80%. The model portfolio remains at 100%. And there's just an updating of stops that needs to be done. And again, trades of the week examples can be found at that YouTube channel for your review. When we look at the blended monthly rebalancings, you can see only Latin American emerging markets are on a cash position from among the 13 ETFs, and it's still right now the top three would be Japan, U.S. real estate, and the Dow 30. And in the 26 ETF portfolio, Japan, U.S. real estate, and U.S. financials. So Japan just turning in a remarkable performance here. Looking at the regional report from the ETF2 database, we have SPY is doing better than the global, so the U.S. is still dominant over the globals, with 70 being better than 68. We have, again, bull normal conditions. Inside the U.S., the strength is in mid caps at 73, then small caps at 71, then large caps at 70, and then technology at 65. The two strongest sectors are Japan at 81 and mid caps at 73. And the two weakest sectors are Latin America at 58 and emerging markets at 56. Looking at the world market model, everything in the U.S. is above average except for mid-cap value, which is exceptionally above average. Japan is dominating. Asia less Japan is above average. You can see the leaders continue to be the new ETFs we added for Asia: Thailand, Philippines, Indonesia, Vietnam, and Australia. And then inside Europe, it's a mix between above average and below, but Sweden remains the standout there. The broad European indexes are doing fairly well. Taking a look at the business and global sectors, see a balance here between U.S. and global materials, U.S. energy, finance, industrials, tech, and really everything else dominating over their globals. The defensive sectors, the large cap mature companies are leading the way right now with staples, utilities, healthcare, and discretion. Latin American emerging markets we've already seen are lagging. Top 30 out of the ETF2 database, sorted by the relative strength. Japan total dividend, consumer staples, more Japan, dynamic media, Philippines, biotech, S&P retail, healthcare, spider, insurance, and so forth. The ones that are green in strength but white in consistency are ones that are adding strength, that are where the recent trend is doing better than the longer-term 10-week trend. So Japan is getting stronger, as are biotech, retail, and healthcare. Natural gas is exceptionally stronger this week. Healthcare and the Nikkei 225. Again, all of these adding strength. The Dow 30 looking through the same lens. I think Hewlett-Packard's easy money is over. I think it cracked this week. It pulled back to 20.90. Although it's brilliant on the 10-week consistency, it backed off a little bit on strength. Boeing is moving to the top of the stack here with a green strength and white consistency, as are United Health and Verizon are on the move up. You can see J.P. Morgan continues to slide down the table, being white on strength but green on consistency. That's the opposite of Boeing, which is moving up, and their strength is green and consistency is white. Caterpillar and Alcoa continue to be the only ones in the Dow that are lagging, and that reflects, I think, some of that material sector that we saw, where we saw weakness as a business sector when we looked at the world market model. Stats on ETF liquidity, and we'll shift now to the daily report. No signals on overreaction or channeling. You can see that volatility is right in the mid-range of normal, and a sudden surge these past 5 days in bulls have started to roll ADX up a little bit, where it was down around 15 is now starting to hook back up, with bulls clearly in charge. Pattern trades only a few. Hewlett-Packard on channeling and overreaction. The VIX on 5-day down. Hewlett-Packard on 551W, so that's good. And then on the auto framer, these are the ones that test out better than 2-to-1. Hewlett-Packard, oil, gold, the VIX, blended commodities, Microsoft, and American Express. Looking at the Dow Tactical Summary, you can see half a dozen dojis, and here's the Hewlett-Packard channeling and overreaction signals. It's number 1 on max pain range compression and offers an 8-to-1 reward to risk ratio. And the fact that it was up on Friday may give it some an additional value add. And its RSI2 was close to the critical 10 level, coming in at 11. Alcoa and DuPont were the big losers. McDonald's, Walmart, and Home Depot, the big winners on Friday. Again, you see American Express coming in at 2.3-to-1 reward to risk ratio on the auto framer, and Microsoft at 2.7, and a doji. So that could be an interesting play as well. Inside the tactical summary for the ETF 30, only the VIX on a pattern trade, and it offers 2.9-to-1, 3.3 in oil. Gold is offering a 3-to-1 reward to risk and is number 5 on the max pain range compression. And all top 5 also happen to signal on the RSI2 value being in single digits. So that's something that should have your attention as a tactical trader as well. Just notice the strength down here in EWJ. Was a doji on Friday, offering 3.2 frog quality number, and has been an exceptional winner 1, 10, 1 month, and 3 month and 6 month performance numbers. The market mosaic, you see the regression line. The price is cut back up to the regression line and sitting right on that line now. It's the slope of that is right back to the 6 month average. It's still below its 10 day moving average, and as a result of this pullback right here, but that's still a positive thing, and that says that if it can hold here and resume, this has room to have real legs going up another 5 to 6%, and then percent stretch from the 200-day moving average, again, between 1 and 2 standard deviations up. So there's room for another leg up here of 5 to 6%. You can see from the Z-score of the holding periods of various swing trade time frames that Japan is really putting in an awesome performance. It's at Z-score of 2.48 on a 10-day holding. Hard to see how it gets much better than that. XLP continues to dominate inside the sector spiders. Energy, Caterpillar, and Alcoa, you can see lagging. Slope of the regression lines and the Z-scores of those. You see the 10-day surge is really high. The 90 has rolled over and flattened out here above the 1.0 channel. The 30 period has rolled over and is drifting downward. And so this almost looks like our little sea serpent peeking his head out of the river. It's paused here. Coming back to the river and finding support and then going would be a normal posture for it. We've already had 1, 2, 3 legs up. This would be potentially the start of a fourth one, and that's where we're getting the estimate for another 5 to 6%. Critical will be 160 in SPY. If it can clear that, then this really is going to start dominating. If there's any kind of resolution at all out of North Korea, then that sense of relief will certainly propel things higher. And just flipping through some reference charts for those of you keeping score at home. I'm not going to talk to these. Except to say that McDonald's and Disney are very attractive here with such strong signal-to-noise ratios intraday. You can see just how much energy has left the building for the commodities. This is really a equity-fueled index here. You can see the enormous move in red that EWJ has made on the basis of its 30-day relative strength score. And that's the news from middle of Kansas here. We're getting ready to go watch the opening inaugural game of the new Women's Professional Soccer League featuring Alex Morgan on the other side. We're hoping that she plays well and she gets a hat trick, but that we beat them 4-3. That would be an excellent game. So this is Ken Long from Tortoise Capital. Keep your risk measured and your powder dry.